Welcome to Trade Finance Talks. My name is Deepesh Patel, editor at Trade Finance Global and host of the podcast Trade Finance Talks. Today, we're having a conversation with Bank FAB on sustainable trade finance, a really important and oft debated topic. So, Anirudha, welcome to Trade Finance Talks, first of all.
Thank you, Deepesh. It's a pleasure to be here today with you.
Thank you. And you're joining us from Dubai. And actually, the UAE has been a center for information, news, and exciting updates all around what's going on in the world of sustainability and sustainable trade finance. But the purpose of this discussion is really to talk about not the high level rhetoric, but real examples and practicalities around what's going on and why sustainable trade finance is important. So Annie, perhaps I'm going to ask you to introduce yourself. So quick 30-second elevator pitch. Who are you? Where are you from? And what do you do?
Sure, Deepesh. Thank you. My name is Anirudha Panse. I've been with First Abu Dhabi Bank now for a little over 8 years. Before joining FAB, I was with Citibank in Mumbai, where I originally come from. And then into London. And then from London, I moved to Abu Dhabi in 2015. Most of my professional life has been spent in trade finance, across traditional trade, supply chain finance, receivables finance, and also now looking at Islamic and sustainable finance as well. So really glad to be here today. Thank you.
Thank you very much. And thank you for speaking to me. So let's take a bit of a step back, first of all. How really is sustainability impacting the world of trade finance? And let's just start with a statistic. 80% of carbon emissions are sourced from global trade, shipping and transport. So there's your shock stat.
Yeah, indeed. Look, I mean, trade by nature is global. Trade by nature is complex. And by its own nature, Deepesh, if you see, there are so many players in the ecosystem involved in the movement of goods globally, right? And if you talk to any of these ecosystem players, their focus is on delivering the right good, delivering it on the right time, delivering at the right price, and making sure that the quality during this whole transit, is not impacted. So the focus, the KPIs are driven by some of these parameters around cost, around timelines, around quality, etc. And therefore, I think the topic of ESG or environmental, social, and governance gets a little bit of lesser importance compared to some of these parameters. Unfortunately, there is no single pivotal force within this ecosystem that can make this change happen, because everybody is running in their own direction and making efforts on their sustainable journey based on their own understanding and based on the jurisdiction where they belong to. With these challenges in the background over the past few years, and especially in the MENA region, we see a lot of focus coming from the corporates, from the government, from the regulators, from banks on making trade more sustainable. To this effect, already a lot of trade has been digitized, and that helps us reduce the paper, reduce the carbon emissions on moving the paper around, and that is a good start in my view. On top of it, there is already a lot of focus coming in from the shippers, from the financial sector, to look at how we can improve the acceptability of electronic bills of lading, electronic paper documents, and to that extent also reduce how the emissions can get reduced. So I think there is already a start in this direction. There is still a long way to go. Regulators like ICC have now come up with publications in terms of what a sustainable trade finance looks like. If you look at 2 years ago, there were no common definitions on what a sustainable trade finance could be. So with the sustainability focus coming in globally on trade finance, with COP28 now being in the Middle East, there is a lot of focus on sustainability in this part of the world as well. And I think with regulations coming on, I see that this will be a mainstream topic of discussion in trade finance as compared to something which was not necessarily getting the right amount of importance.
Thank you, Annie. And a common theme that we see across many countries in the MENA and the GCC region, and it would be remiss of us not to mention that UAE is hosting COP28 in just a few weeks' time, and we'll come back to that discussion a bit later on. I think the other key trend is really going from oil-based to knowledge-based economies. I think diversification is the buzzword that's banded around there. You've left a really good segue into my next question, because standards are key. The ICC, International Chamber of Commerce, have released and developed these standards to offer to terminology around sustainable trade finance and sustainable trade products. How is the bank actually looking at these standards to implement them across various trade products and functions within FAB?
So, Deepesh, again, great question. I think the start has begun. The journey has begun. With the ICC regulations coming in, it gives now a common standard framework for the banks, the corporates, the regulators to look at what a sustainable trade finance looks like. So obviously, from an FAB perspective, this has been our focus as well, in terms of making sure that we are able to support not just the working capital needs of our clients in a conventional way, in an Islamic way, but also now in a sustainable way. We see a lot more increased demand for sustainable solutions coming from our clients. And to that effect, if you look at all our traditional trade products today are available in sustainable formats. So a letter of credit, a letter of guarantee, a simple loan, when linked to a sustainability objective, can be looked at from a sustainable perspective. We adhere to all the UN Sustainable Development Goals. We are looking at how we can incorporate the ICC regulations on sustainability within our day-to-day finance to ensure that the regulations around the buyer, the seller, the goods, the shipper are taken care of when we look at trade finance from a sustainability perspective. And more importantly, in the open account space, we've launched sustainable supply chain finance solutions, which help not only our clients to meet their working capital needs, but also to help get their supply chain more sustainable. Now, having said this, Deepesh, one of the things as a bank that we are extremely careful about is greenwashing. We are extremely conservative about this. For every trade that we want to call a sustainable trade, we have a strict governance process in place internally, and we involve our group ESG team to ensure that we're doing the right decisions when it comes to classifying something as a sustainable trade finance.
Thank you very much. And I think it might be good to talk a little bit more about the open account in innovations. Perhaps you can talk a bit more about the sustainable supply chain finance proposition that you've developed at the bank.
Yeah, sure. Happy to, Deepesh. Look, we've been the leaders in the supply chain finance space in the region because we were one of the first local banks to have a fully automated supply chain finance solution back in 2015. We have then diversified ourselves into the region, and we have now regional solutions to support our clients for their regional needs on supply chain finance. We offer that in the Islamic version as well as conventional version. And then end of last year, we also extended our supply chain finance offering into the sustainable space. So what sustainable supply chain finance does, Deepesh, is it not only allows the clients to reap the benefits of a normal supply chain finance program, whereby they can have the working capital benefits, they can look at strengthening their financial stability of the supply chain. But in a sustainable supply chain finance, it also allows them, as well as their suppliers, to embark on the sustainable journey. So to this effect, I believe collaboration is very important. We have therefore collaborated with fintechs like Coriolis, or which is now TradeSun, who help us assess the sustainability ratings of our clients' entire supply chain, and based on the ratings of the sustainability of our client supply chain, we are able to give even financial benefits to some of these suppliers to become more sustainable. So if you think about it, it's not only giving the clients the benefit from a liquidity perspective, it's not only giving the client the benefit from a risk mitigation perspective, but it is also helping them to get more sustainable and give some financial benefits or financial incentives to their suppliers, so that the suppliers can also start looking at the sustainability in a positive way and in a more mainstream way.
Thank you very much. And I think sharing those benefits and being very mindful of the environment are also some of the key principles of Sharia financing, particularly when you look at Murabba financing and Takaful. I guess question on the detail, can you provide any examples of how FAB collaborates with many of the industry stakeholders to enhance supply chain transparency? And I guess I must say, and I must brag here, but Bank FAB did win the Sustainable Trade Finance Award at TFG's annual Trade, Treasury and Payments Awards in Cyprus, and the award process was totally done impartially by an independent group of steering committee judges. So perhaps you can talk us through a few examples, Ani.
Yeah, sure. Look, I think I want to start by saying collaboration is very important, right, in this for us to be successful. Because unless each and every member of the ecosystem plays their part, we cannot really have a very sustainable or very successful sustainable supply chain. So to that effect, our partnerships has been multifold. So we have partnered with our clients for spreading awareness, for example, because when you talk to different segments of the clients, and we being the largest bank in the region, we bank all segments. So we bank the governments, we bank the large corporates, and we bank the mid and the SMEs. When you talk to the SMEs, there is barely any focus coming on the SMEs on the sustainability part of the trade business that they do, because as I said before in the beginning of this conversation, their focus is so much on getting the goods, the quality, the price, the timing right, that sustainability is not really always on the top of their mindset. So we've partnered with a lot of our corporate clients, and we've done roundtables with many of these SMEs in creating awareness. With the regulations coming in now in the UAE, with the COP20 happening here, as you rightly said, this has definitely helped us in raising the awareness. And FAB is one of the lead sponsors of COP28. We have a huge pavilion there, so if you are in Dubai, welcome Deepesh to visit our pavilion. So that's the beginning again. I think it's all starts from awareness. If I were to give you some specific examples in the supply chain finance space that we've done on a sustainable basis, no better example than the one that we worked with the Department of Finance in Abu Dhabi and one leading insurer in Abu Dhabi, especially during the pandemic, to support the supply chain in the medical segment of pharmacies and hospitals, to be able to get them paid much faster. So obviously, it played a huge positive impact in the UAE economy, especially in the pharma segment, in the medical sector, and this allowed the pharmacies, the hospitals to get access to their cash much faster. So not just the energy aspect, I think the social aspect is also important, and this program helped us achieve the S aspect or the social aspect when it comes to looking at ESG.
Thank you very much. Well, I guess there's also the G impact, the governance impact as well. But how does the bank consider the wider impacts and look at ESG more holistically when tackling sustainable trade finance?
So my personal view is that the S and G are linked to the E. We cannot look at them in isolation, because unless there is social awareness, unless there is governance around the whole ESG aspect, I don't think E by itself can be met. So there cannot be, in my view, an environmental transition without considering the impact on the social side. So when we've looked at many of our projects from a trade financing perspective, there are several examples where we have financed renewable energy working capital, sorry, the renewable, trade and working capital cycles of renewable energy companies, where it has allowed the corporates or the governments to look at alternate sources of energies. There are several examples where we've looked at financing sewage treatment plants or desalination plants, which have again helped from a social perspective for our clients to achieve their ESG goals. So these are some of the examples I can talk about specifically in the SNG space, which do not necessarily look at the E aspect of it, but still meet the overall UN Sustainability Development Goals.
Annie, thank you very much. I think I'm going to ask one question, which is, what are the priorities for the bank moving into 2024? So we're going to have COP28. I'm sure there's going to be an impetus to push the regulator and push the government to really concert efforts and drive action, meaningful action, tangible action a lot quicker than what they're doing. I'm sure there are going to be pieces to ramp up financing sustainable trade transactions. But what are the big few priorities for FAB as we look into 2024 with that lens on sustainable trade finance?
So look, I will talk more about from a trade finance perspective. For me, as you know, COP28 has been made as a call of action, right? So that's what I would kind of continue as a momentum in 2024, a call of action for more awareness, a call of action for more sustained regulations, a call of awareness for the wider banking industry to move towards a more digital economy, a more circular economy, and a call for everybody to work together in terms of collaborating to see how we can imbibe ESG, not just in a transaction here or another transaction there, but in the way we do business.
Thank you very much, Annie. And I think it's reflective of a couple of recent reports published that actually show that the consumer is very happy to pay more, or even worse, that they are likely to not do business with organizations that don't consider sustainability, circular economy, etc., within their core business model. I think we should see this as an opportunity. I think the other piece is that corporates and banks are, they understand that we can't keep making the profits and the revenues that we've done historically, because we've got to consider the longer term impact, particularly when it comes down to pricing the impact of things like climate change on our planet. So Annie, thank you very much for speaking to me on Trade Finance Talks. All the best in COP28. Hope to see you there, and we'll speak soon.
Thank you, Deepesh. Appreciate it. Thank you.